This recent decision that we have indicates, maybe promising signs for the economy, but also that the central bank may not, or may be done raising interest rates altogether. And as we bring Doug Flynn in, certified financial planner and co-founder of Flynn, Zito Capital Management, whether that's the case or not remains to be seen. But investors certainly were betting today that it was. I don't know if Jay Powell said that, the Fed chairman. I don't think he did. But that's, as you know, that's how it works. Investors say that's what he means. Do you think that's what he meant?
Well, Connell, I think that's what they were forecasting and expecting, and that's why I think this week we're up about 1,500 points on the Dow, 500 today. So, yes, I mean, he left the door open, but basically Wall Street and investors are completely ignoring that he's going to raise rates, and now they're not expecting him to raise again, if he does at all, into the first quarter of 2024. So they're basically blowing off that he's ever going to raise again and just assuming that he's not. And if they're wrong, then the market's going to correct itself. But if they're right, then it's taking advantage of that opportunity right now.
Well, what side would you come down on, or what do you think the best bet is here, that that he is done? Because if he is done, you're right, that's very good news for the market, which we obviously some of that is already in the market with these gains. But if that's true that he's done, there could be more to come in terms of the upside, right?
Yeah, I think the reason they left the door open is because they want to see more of the data that's going to come out. I mean, wage growth is slowing. We got some of that information yesterday. We'll get more of it tomorrow from the Labor Department. And so you need wage growth to slow a little bit. You want the economy not to run so hot. And in a good way, that's good for the economy. It's bad because inflation, if consumers keep spending, that's going to mean that the companies can raise prices. That's going to keep inflation high. And then the Fed's going to have to raise again. So if things just kind of calm down a little bit, then they're probably right. And so we're very close to knowing, but we are absolutely in the ninth inning of interest rates being raised. And then that sets us up really well for 2024.
All right, that would be we would take that. Those of us who are in the market, of course. And you're right. The biggest economic report of any month is the monthly jobs report. We get that tomorrow at 8:30 Eastern time. So we'll cover that tomorrow. We'll see what comes in. I want to talk to you again about autos just for a moment, and then we'll get back to our coverage of the war in Israel with all that's been happening the last even few minutes. We were having a discussion about the UAW and how, I mean, that was a big win for the union workers. And I think, earlier in the week, we started talking about whether, some of these non-union auto shops might end up being unionized. The Wall Street Journal had a big article about Tesla. And the takeaway essentially was, it's going to be tough for the UAW to go up against Elon Musk. They've tried before, and Musk can be very aggressive. You go after his own workers, whatever it takes to keep the union out. Any chance you think Tesla will end up with union workers?
I mean, there's always a chance they're going to try. The problem you have is about the three animals on Wall Street, and you can apply this to anything. There's bulls make money, bears make money, and pigs get slaughtered, right? So the union has some big wins here. If they're going to get even more bullish and try to, go deeper into these non-union shops, they have to be careful how hard they push, because you're right. Coming against Elon he's a formidable foe. He will tweet even though he's not supposed to. He will do whatever he needs to do to try to tamp that down. So I think the chances are slim, but there is always a chance. And I think that he'll do whatever he has to do to kind of keep that out so he can keep his price points where he wants to keep them. So I don't think it's a very large possibility at all, but you never know.
It's interesting because he does pay his workers less on an hourly basis, but he argues they get a lot in stock options, which more than makes up for it. So
which could be worth a lot.
Yeah. Doug, good to see you. We'll talk to you again soon. Doug Flynn on that.